Good evening, everyone. This is Pranav here. This would be the second webinar on commodities, which will be going on in the Talking Finance. Previously, we had done on the outlook on commodities. So, doing something different was the idea to do, where we have many things that comes in the market. In equities, we have the fundamentals in terms of the balance sheet, in terms of the supply demand, what is happening in the economy, and how the profit and loss statements is there. So those are different things. So when it comes to commodities, we don't have any balance sheet, we don't have anything in writing. So what happens has been happening in the economic point of view, what the data that has been coming out, what are the important events that are lined up. So that has an impact on the commodities, has an impact on the currencies, overall on the financial markets, global economy as well. So today's session is focused more on the economic data that come out, on a day-to-day basis. So before going into the data, first thing that we need to understand is the global market scenario. What is this global market scenario? So this global market scenario is it is a 24 hours market, we can say, and it runs 6 days a week. Only it's a Sunday that is a holiday in the market. So why we call it as a 24 hours market when we go into the global phenomenon? Because the market starts with New Zealand is the first market to start, beginning of the week. It starts at 3:30 in the night as per the Indian Standard Time, which is being followed by Australia, the Asian markets, which includes Tokyo, Hong Kong, China, Singapore, Japan in the sequence. And then in the afternoon, in between we have the Middle East markets also starting. So mind you, Middle East markets are open on Saturdays as well. So that is why we have this 6 days a week, and then which we follow it by with Europe, London, US. So this is how the market rolls over from one market to another market, and the sentiments also roll over from one region to other region, and that is why it is called as the 24 hours global market. So this is what the broad picture of the global market is. The data that come out, keeps coming out, as the country releases those data. So the data released by Australia and New Zealand will be in their particular time. The Asian market data comes in the morning session along with the Indian markets. For example, the Chinese data comes around 7 o'clock in the morning, 7:30 in the morning. Then the Indian data comes around 10:30, 11 o'clock. We have some data that are released in the evening as well. Then European data, the UK data comes out when their particular market starts. And then the US data starts in the late evening as per the Indian Standard Time. So this is what the broad global market picture is, and data keeps coming in and it keeps impacting the markets, it hits the sentiments on an overall basis. So those were the global market timings. Since we are specifically focusing more on the commodities part, we need to understand there are few important global exchanges where the commodity volumes are much higher, much bigger than what we have in the Indian markets. Starting with Japan market starts at 5:30 in the morning, then it closes at 11:45, then again it starts at 1. So this market keeps rolling in. After which China market starts, the Indian market starts at 9 o'clock. LME starts in the afternoon session. Sorry. Although the LME has an electronic system as well as the ring system. So the electronic trading on LME starts at 5:30 or 6:30 in the morning and goes on till 11:30 till our market closes. That is why we have Indian markets being run from 9 to 11:30 in the night. And then in the evening we have the US market that starts around 6:30, 7 o'clock. So this is a continuous process that goes on. In fact, US has a 24 hours running market electronic trading system where gold, silver, crude, copper keeps on fluctuating. Some or the other traders keep buying, selling over there, as per their market timings. Now we'll move on to this is the summary of economic data that we are going to discuss. What happens in the first week of the month, second week of the month, third week, and finally goes into the fourth week of the month. Although the data are too many that comes out, we have just taken an example of the US data, how it impacts the US currency, how it has an impact on the commodities, and we can find a similar correlation whenever any particular country's data is released and how it impacts its own currencies. This, if you can, everybody is able to see the slide. On the slide, if you see this, we have mentioned first, we have taken a focus which is the weekly data releases. So what are this weekly data means? These data are released every week, 4 weeks in a month, all 4 weeks, 5 weeks in a month, all 5 weeks these data are released. So every Wednesday we have the data on the crude inventories, which everybody must be knowing. So US API data, that is the American Petroleum Institute, releases its data every Wednesday, then which is post market hours after the market closing. Then on Wednesday late evening, they have the official inventory data from the US Energy Information Administration. So what this data shows, it has an impact on oil prices. If we see the data that was released over the last 5 weeks, oil inventories have been coming down. The inventories of the byproducts of crude like gasoline and distillate has been coming down. So that is positive for the oil prices, and we have seen some good buying support coming back in the oil prices this week. Then every Thursday we have the initial jobless claims data, which is basically the US data that comes in where the number of new participants have been added to the jobless and they are claiming those benefits. So, and also there is a data along with which shows a continuing claim, means on a regular basis they are claiming those benefits. Then we have the natural gas inventory. So we have the natural gas futures that are traded on the exchange counter, that is MCX. It is a complete replica of the natural gas futures that happens on NYMEX. So whatever weather changes, the inventory plus minus changes, everything that happens is reflected in the US NYMEX prices, and the same replica is happening in the Indian markets as well, because we follow them dot to dot. So this data is released every Thursday. Yesterday also we had the natural gas data which had come in lower than expected. So we saw a big spike coming in the natural gas prices. Then every Friday we have the rig count data from the US. So what is this rig count? Rig count is how many active rigs which are exploring oil or exploring gas under the sea, maybe under the underground. So this rig count, active rig count, means those many rigs are active, and which it is an indication of the future output. So if the oil rig counts are rising or the gas rig counts are rising, it indicates that the supply is expected to increase in the near term. Generally, it takes 15 days of time from the exploring and converging and the extracting the crude or the whatever the gas from the thing. So this 15, it is an indication of future, and if this rig count starts falling, then it is an indication that there may be some supply coming down in the near term. Then there is these are some tentative speeches from some of the officials, which has a major impact on the market. For example, if Fed Chairman Jerome Powell comes in and says something in the market about the interest rates, so what if he says that interest rates are likely to stay higher for a little bit of a longer period of time, so what would be the impact of that? We would again see the US dollar finding some good buying support, dollar start going up, the risk asset starts coming down, like equities में selling pressure आना start हो जाएगा, commodities में selling pressure आना start हो जाएगा, because dollar, if interest rate stays higher, then we would see some, it means that the cost will increase, it will slow down the economy. So that is why the risk assets would start coming down. In contrast, the bond will find some good buying support because the yields will start moving higher. Then similar commentary from other central bank officials will have an impact on their respective currencies. For example, yesterday we had the RBI's monetary policy. Although the monetary policy was in line with expectations, so we didn't see much bigger impact on the Indian rupee. But yes, the rupee was just stable and fluctuated in a range. So it depends upon the severity of the data, the severity of the commentary that comes in, and it has an impact on the respective country's currency. So that is what I've highlighted below. The central bank's policy meeting outcome impacts the respective currencies in a and we could see a big move or a ripple effect if there is more aggression or no less aggression in their speeches. So few central bank timings I have mentioned below which are important from the global market perspective, from the commodities perspective as well. First is the ECB, that is the European Central Bank comes out with its monetary policy. Bank of England, the People's Bank of China becomes important. They release their monetary policy early in the morning around 6:45, around 7 o'clock. So why the People's Bank of China becomes important? Because China is the major, it consumes nearly 50% of the global metals output. It is the largest consumer of crude as well. So any policy changes by them, any measures taken by China will have an immediate effect on the commodity prices, especially the base metal prices, as well as on the oil prices as well. Then we have the RBI, Bank of Japan. Bank of Japan has come into the limelight because of the yen carry trade that happened over the last week. This week, Monday, we saw some sharp sell-off in the equities, after which we have seen some steady buying support. So this came in after Bank of Japan raised the benchmark rates from 0 to 0.25, which was an unexpected move. Also, they intervened in the FX market because their currency had fallen towards 165, which is against the USD. From there, it has appreciated to 145. So these were the few moves that triggered some big sell-off in the markets, and also the yen carry trade. So what is this yen carry trade? It means we are buying from a country which is offering low interest rates, borrowing currency from there and investing through via currency or in other asset classes where the interest rates is high in other markets. So when the interest rate goes up, your cost goes up, and that is why we see this unwinding of carry trades happening. So beginning of the month, this month itself, beginning of the month, on the very first of the month, we have the manufacturing PMI data coming out. So what is manufacturing PMI? Manufacturing PMI is the survey of the purchase managers across the few industry participants, which is released by every country, from be it China, US, Eurozone, UK, India, everywhere. And this data comes first of the every month. If first is a holiday, maybe second or third, it releases. So what this data indicates, it indicates that how the manufacturing activity has been going on. The reading comes in 50s in numbers. So it comes from 0 to 100. Anything above 50 shows an expansion in the activity. Anything below 50 shows a contraction in the activity. So this is how this manufacturing activity goes in. Then it has many other components within it. Apart from that, then we have the factory orders data. What again, it is linked to the manufacturing. Higher the orders, higher the demand. It indicates export import, that is the trade balance data. So what this export import indicates, that the trade balance indicates how the economy has been performing, how the demand has been going on. If your exports are rising, economy is going good. Imports are rising, it means the demand has been going up, going higher. So it also reflects on the trade balance, also reflects on the current account deficit, and has an impact on the currencies, especially if in terms of in the US dollar. If it has impact, then it has impact on the gold as well, because gold and dollar are inversely correlated. Similarly, manufacturing data has an impact on the base metals. Oil prices can have an impact if we see continued downside contraction. For example, if you see the manufacturing PMI data from Eurozone, from UK, it has been continuously in the contraction phase over the past 8 to 10 months now. This indicates the demand is low, the economy is underperforming. Similarly, we had Chinese data which were showing negative growth, but over the past 2 to 3 months, they have their indication has been showing above 50. It means that they have started recovering, so the demand is likely to pick up. And we have the first day, then second day, the data comes, that is the services data. So we have, one is the manufacturing activity and another is the services activity. So this services data, the measuring remains same between 100 to 50. Above 50 is expansion, below 50 is contraction. And in this services PMI, all these services activities are covered, like the back office services, the insurance services. Wherever the manufacturing is not involved, everything is involved in services and in the non-manufacturing data. So this has an impact on US dollar as well as gold. Now, here we need to understand that the developed economies are more relied on services. The developing ones are more relied on manufacturing, although the shift is going on, but in developed, if the services activity continues to grow higher, it means that the economy has been still going on at a steady pace. So that is what is happening in other countries, in developed economies like Eurozone, US, where the services activity has been going steady in the expansion phase, although it is not expanding at any faster pace, but even it is not contracting. There may be a slowdown and again up and down phase. So that is why we say that their economy is still going at a steady pace, not continuously going down. Then other data that we mentioned, the commentary from the officials, the weekly crude inventory data that comes out. Then we have the first week of the month is also releases the employment data that comes out from US. It becomes very, very much important. This employment, that is the NFP, non-farm payroll data. Along with it, the data comes is the unemployment rate. Then we have the participation rate. So this data also becomes very much important when the Fed decides its interest rate decision. So what would be the impact of this? If the unemployment rate goes down in the economy, it means the economy is going very good. It has started performing very well. So it means it is positive for the dollar, negative from the gold perspective, but positive for base metal and oil, because if employment is up, unemployment rate is low, it means more people are on the job, everything, hourly earnings are going good, everything is going good. It means demand is expected to increase. It would mean that demand for oil will go up, demand for commodities like metals will go up, because it will be used in making housing, electrification, everywhere. So along with dollar, commodities will also go up, but gold will have a reverse impact, because it will start going down. Then the jobless claims, continuing claims, we have already discussed when we spoke about the weekly data points. Then mid-month, what starts coming in from the second week of month, and we can correlate this similar employment data with other nations' currencies as well. If in Eurozone the employment is going low, or unemployment rate is starting to go up, it has a negative effect on their currency like Eurozone. Then UK, if the unemployment starts going, it starts having an impact on its own currency like pound. So that has an indirect correlation with the US dollar, because if euro starts depreciating, pound starts depreciating, the dollar starts appreciating. So inflation, CPI inflation, which has been the very focus over the past year and a half, or we can say since the COVID has slowly gone away from the global market, not completely, but yes, gone away. And so inflation, which has been the core, we have seen inflation levels going to 10%, 12% in the developed economies. From there, the inflation has now started coming down, and is seen between around 2 to 4% in the most of the developed economies. So why this inflation becomes important? It becomes important from the central bank's perspective, from the currency perspective as well. What indicates a higher inflation? First thing is there may be higher demand or supply shortage. So it can be either of two. If demand starts increasing and supply cannot be met up, it would increase the prices. If demand is low and supply is sufficient, it would start bringing the prices down, so inflation would come down. So it has a direct correlation with the prices. So what will the impact? If inflation starts going up, it means that the dollar will start feeling the selling pressure and gold will start going up. Then similarly with other currencies, if inflation starts going up in India, what will be the impact of that? We will see Indian rupee coming under selling pressure. Dollar will start strengthening against the Indian rupee. Then we have some auctions like bond auction, like RBI does, the auction of bond sales every Friday. Similarly, every country does that auction sales their bond to the either to overseas or to the domestic people. Then the monthly report from OPEC and the International Energy Agency. So these are the two major oil tracking agencies globally, which prepares the entire report, surveys the all the countries, how the demand is going, how the supply is going, and what is the future path ahead. So they give their demand and supply estimates, and based on which we may see some impact on the oil prices. Also, we need to note that the impact could be immediate and not a bigger impact. Then we have the PPI. What is PPI? Is the producer price index. So what does this data indicate? If your producer price rises, if your final input cost is rising, it means the output cost will also go up. So it has an indirect impact on the consumption pattern also, because at higher prices we may see lower consumption, and if producer prices goes down, your final cost of the final product goes down. So, and that has an impact on the consumption pattern. So this data becomes important. So if producer price starts rising, what will be the impact on commodities? It means that the commodity prices have risen. So after which only we will see the producer price rising. Once your input price starts rising, it will reflect into the producer price. Speeches of the Fed officials, I have already said. Import price index, export. So this indicates how much inflation we are exporting, how much inflation we are importing. For example, the best example was the gold import duty cut that we saw in the budget last week. So we as India are the biggest consumer of gold. Irrespective of the prices, we purchase even a small amount of gold during the occasions. So the demand for gold continues to remain higher. So since gold prices have rallied to 76,000 in the month of May, to close to 76,000, the imports have been rising. So what measures did the government did? So the import index, is increasing. Our import price index, the imports, inflation due to gold imports have been increasing. So what measures did the government take? They reduced the import duty to bring down this import cost. We cannot go and reduce the gold prices because it is being followed by the global market, but we can take some measures to really give a relief to the domestic buyers. Next is retail. This is again the mid-month retail sales, core retail sales, which has an impact. Higher the demand, retail sales, if starts rising, it means that demand is up, the economy is performing, positive for the dollar, positive for the metals, positive for the oil prices, negative for gold. Then NY Empire Manufacturing. So these are the survey of domestic region, particular survey of manufacturing activity happening in a particular region. So that is, it is industrial production. Again, it is linked to the base metals. Higher the production, it means the demand is strong, economy is strong, and positive from the US dollar perspective, negative for gold. Job openings, again, how many fresh jobs have been created in the economy. If more the number of jobs created, it is positive from the economic point of view, positive from the currency point of view, negative from the gold, because if dollar starts appreciating, gold has an inverse correlation. Then we have the housing data. Again, this data becomes very much important, like building permits, new housing starts, new home sales. This gives an indication what the demand is, how the level of income is. If people are able to earn above their savings, earn above their expenses, means their savings, where would they invest? What would their first basic necessity would purchase a house? If housing demand starts going up, building permits starts going up, new house building is going, it means that the economy is going very well. Positive again from the base metal perspective, because metals like copper is used in wiring, zinc, nickel are used in string of iron rods. So the demand for metal will go up. Again, positive from the economic point of view. So dollar will also go up. Their respective countries' currency will go up, and it is negative for the gold prices if we consider as the US market. Fed Jerome Powell testifies. So what is this testifies? Testifies means every month after the Fed meeting, after the 10 days of the Fed meeting, Fed chairman explains his policy moves, what is his take on the US economy to the House of Representatives in the US. So he does it a couple of times, one for the Republicans and one for the Congress, and expresses his view and his team's view on the Fed policies, everything. Next is the FOMC meeting minutes. So what does this data? It gives a detailed discussion, or we can say a detailed copy of what the Fed's outcome, why Fed took that decision, either to, or why the central bank took the decision to either raise the interest rates, raise the repo rates, or reduce the rates, or keep them unchanged, what their economic projections are, what the other members are thinking among the Fed. So it gives the detailed projection of the Fed's previous meeting. The impact could be minimal, but would be on the currency and indirect impact on the commodities. But yes, when the Fed chairman testifies, when he speaks anywhere, either in the parliament or anywhere, it will have a bigger impact on the markets, especially on dollar as well as on the commodities and across the financial markets as well. Then also as we go towards the end of the month, we see the data coming out from on the manufacturing and services PMI. So these are the provisional data that come out during mid-month, just gives us a small of how the activity has been performing across most of the regions, and this data, mind you, come out from across all the regions. Then towards the end of the month, we have the data that come out would be on the consumer confidence, home sales already there, durable goods, core durable goods, the GDP data. So the consumer confidence becomes very much important here because it highlights how the economy is going, how the government policies are going. Higher the consumer confidence in an economy, positive for the dollar. If everything is going on very well, like your food prices are stable, people are more happy, people are more confident that the economy is going strong, it means positive for the dollar, positive from the oil perspective, positive from the metals perspective, and negative for the gold because it has an inverse correlation. And similarly, if consumer confidence starts going down, this vice versa will have an impact. Gold will start going up, US dollar will have a negative impact on it. And this consumer confidence data are released from Eurozone, from UK as well, from Japan as well. So it has a direct impact on their own respective currencies as the data comes out, and has a negative impact, or we can say inverse impact, on the US dollar. The durable goods, core durable goods, again, these are linked to the manufacturing activity. How this manufacturing activity is going up, factory orders are going good, industrial production is good. So it has an impact on the durable goods as well. It means that the indicates how month on month the things have been happening, how the manufacturing activity has been performing. So, and have a direct impact on commodities as well as the dollar, and an indirect impact on the gold and silver prices. GDP, yes, again, if all this data that we discussed have finally sums up into the what we call as a GDP, that is the gross domestic product. This data comes out year-on-year basis, month-on-month basis. Some country releases month-on-month basis, some country releases on a quarter-on-quarter basis. So it depends upon country to country, depends upon their government policies. But a GDP growth, if it is going steadily rising GDP, it means everything in the economy is going on a steady basis. There may be some ups and downs in the economy, but overall the economy has been performing well. So it is positive from their respective currencies. And if we consider our example of US market, it means if it is positive for the dollar because economy is going very good, then the economy is performing very good. Positive from the commodities perspective because demand will be strong. oil prices will have a positive impact, but negative from the gold and silver perspective. Similarly, if GDP starts coming down, or we can say there is a negative growth where we see a deflation as well, if it is a continuous 3 months of negative growth, then it is negative for their respective currencies, positive from the gold perspective. Then towards the end of the month, or we can say last Friday or last Thursday to Friday of the month, we have data on the core PCE and the PCE. This data has come in limelight over the past 1.5 years. So what is this data all about? What does PCE mean? PCE means personal consumption expenditure. So how much an individual or a family is spending on his personal consumption. So this data becomes very much important from the Fed's perspective. When they take their interest rate decision, they watch this data very closely along with the US labor market data that we discussed earlier. So if any rise in the personal consumption expenditure, any rise in the personal consumption would mean people are spending more. Inflation is likely to stay, can go up if this personal consumption starts rising. If this personal consumption PCE starts coming down, it means that the demand is less. So this data is very much important from the Fed's perspective. And then along with it, that another data that comes is the personal spending. How this spending is allocated, how the people spending, are they spending on food, or they spending on investing, or purchasing a house. So it is a complete basket of which comes on a month-on-month basis, and we can get to know how this personal consumption has been happening across the US market. And this data will be followed by the consumer sentiment, consumer expectations. It is the same as the consumer confidence data that is released along, from the US or from across other regions. It is just that there is another agency or a private agency which releases this data. So this is all from my side, on the economic data and the impact of that data. Due to time constraint, we had to summarize in a crisp manner. Going in a very detailed version, it would take a lot of time, maybe 3 to 4 trading hours. So this is all from my side. We'll open this session for Q&A. If anybody has any queries, they can ask.
So the first question, what is the inventory data time for zinc and copper?
See, the inventory data comes out from 2 exchanges that releases the data. One is the London Metal Exchange and another is the Shanghai Futures Exchange. So on LME, during normal market hours, when there is no daylight saving, the data comes at 1:30. When there is a daylight saving in 6 months, it comes at 2:30 in the afternoon. And Shanghai data, they release every Friday, but there is no fixed timing. It's a random time around 11:30, 12 they release.
Thank you, Pranav, for your response. So there are no more questions which have come in.
Okay, just I want to highlight one point here. When we correlate, this data with the prices that are traded live, so we need to watch out one thing. The impact of this data would be immediate, but the trend won't change. For example, if I tell you, if any data that comes out today, if prices are in a strong uptrend, then we should note that if the data is negative, completely opposite to the trend, it doesn't mean that prices will start falling. We may have an immediate impact on that particular commodity or currency. When the data is released, we may see a small jerk on the downside, after which prices will again start moving in its trend. So whenever you are trading or in the markets, the impact of data would be immediate and won't last for too much of time. It doesn't mean that it will start falling and falling sharply unless and until the data has a very bigger impact. Like we had seen the yen carry trades, we saw heavy sell-off in Japanese, in the USD JPY. The yen appreciated from around 165 to 145. That was a one particular day event, after which it has movement has gone sideways, and it is again start going up. It has again went up to 147 around those levels. So the impact of this data would be immediate, but that won't change the trend unless and until it is a very significant or a severe data that comes out. So that's it.
Okay. Thank you, Pranav. Actually, we have received one more question right now, so I'll just send that to you. So, which chart should I look at for trading in natural gas?
If you are trading in the Indian markets, I would advise look at the natural gas Indian market chart. It is available on the internet. You can go visit any website, like investing.com or some other website. Or if you are having a trading account, you can watch those natural gas charts on your app as well, mobile app, your trading app. Watch out for daily chart if you are looking for and want to know what the trend has been going on. Daily and weekly will give you a clear trend on the charts. If you are trading with intraday, you can go for an hourly chart also or a 15-minute chart also.
Okay, thank you, Pranav.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.